Hi, everybody. Welcome back to the Paradigm Press News Channel. We are here today with Andreas Clenow, who is one of my favorite financial authors. He's written quite a few books. One is Following the Trend, another Stocks on the Move. He also wrote a great book, if you're interested in coding, called Trading Evolved, how to build your system and futures trading system through Python. Fantastic books. I've long admired Andreas from afar, and I'm so happy to finally get a chat with him. Of course, I am Sean Ring, the editor of the Root Awakening. Andreas, how are you today?
Thank you, Sean. Excellent. Good to be here. Oh, you forgot one book.
Yes, your
Gotta,
new fiction book, of
I
course.
gotta plug that one as well. I wrote this one as well. That's my the odd one out. The financial novel.
That's fantastic. I am going to get a hand. I saw that on your website. I'm like, I got to get my hands on that.
I
That's
get you a
fantastic.
copy.
So if we could, let's go back to the beginning, because one of the things that, and again, my memory is getting scurry because I've now left Asia quite a while ago. But when I was living in Singapore, I remember picking it up, following the trend, and it seemed almost like it was a rebuke to the turtle traders that got famous. The various authors who were making lots of money reporting about the turtle traders. Am I correct? Did you seem to disagree with them? I vaguely remember that.
Oh, you're trying to stir something up there. I mean, no, I got no problem with them. I mean, it's a different book, different perspective. I have a different background from some other people who wrote books about managed futures, and I wanted to write about what I saw as the story about how it's actually done from the inside. I was very worried actually when I wrote it for one reason. I thought when I was writing it, I figured that the most valid critique somebody could have against this book is that it's basically a 300-page research paper that could have been done in like 5 pages. And I figured that that's actually a very valid criticism. So I believe I counted that in the first sentence of the book.
Right.
Let me see. I'm paraphrasing here. I can't remember what exactly I wrote, but I think actually the first sentence in my first book is something like, "This is an entire book that could have been summarized in 10 pages," something like that. This goes through one single strategy, a simplified strategy, and explains the rules of this simplified strategy and on how it works. I wanted to preempt that, but in the end, of course, nobody pointed that out, much to my, I don't know, surprise. And that was one of my concerns. My other concern was that I was actually the first book I reverse engineered some rather large American hedge funds.
Right.
And I figured not everybody's got a sense of humor about these things. And America is still a litigation happy country. So I figured I got to take some steps to protect myself, make myself very, very difficult to sue over this. I went through all kinds of troubles to make sure I was quite well protected on that. And again, almost disappointedly, none of them have any concerns. A few of them that I was concerned because I painted them out, and maybe it wasn't the most popular terms. I mean, I was trying to be very diplomatic, but still, they actually contacted me and said I was completely correct, and they wanted to meet me to explain what happened and what went wrong and what they did to fix it afterwards. So, lucky me.
Yeah, that's fantastic. I thought the book was interesting. I was a futures broker. I didn't run any books like that, but I used to deal with all those guys, which is not the most fun thing in the world. You followed that
Yep.
up with Stocks on the Move because,
Yep.
if I recall, again, people were like, "Hey, if you could do trend following with futures, can you do it with equities?" And what was your conclusion to that for everybody out here?
Well, I mean, I try to make a difference here in distinction in terms of terminology. I understand that I'm splitting hair here, but what I try to say in the book is that trend following doesn't work on stocks, but momentum does. You can argue what's the difference, but I want to draw a clear line here because for me, it is quite different. And if you think that a normal trend following model can just be applied on stocks, you will be in for quite a rude surprise. The big difference is the trend following, the way we do it on the future side, is completely based on, say, two main things, two main properties in the futures world. One is the diversification possibility. We have instruments that move extremely different. I'll take rough rice and lumber and correlate them against, I don't know, the Japanese yen, and you might not, you're not going to get too high correlation, right? That's one major advantage of future space. The other one being the possibility of, I wouldn't say infinite, but pretty extreme leverage in case you need it, meaning that we can freely trade instruments with very, very low volatility without having cash constraints. Like take the Fed funds, for instance, the Fed fund rate, the 30-day rate. It's not going to move much in a day. You need to take enormous positions for it to make any sense.
That's
When
right.
you deal in stocks, you have the opposite. I mean, you have two major problems. Stocks move in groups. When stocks move up, they all move up. There's a difference in how much they move up. Obviously, some stocks are better than others, but in the bull market, they pretty much all move up. In the bear market, they pretty much all move down. You don't have diversification, not anywhere near what you have in future space. The other thing is your cash will run out. You can't just take on more positions because you have a good opportunity. Cash is limited. Leverage is very, very expensive. Borrowing money for cash positions, it's going to kill your returns. It's start doing it for real, and it doesn't look like the backtest software anymore, right? You also have issues on the short side, whereas on the I guess there's a third one I mentioned too, but a third one on the future side, you can take short positions and almost, not entirely, but almost treat it as if it's just a difference in sign, in the mathematical sign of the equation. Stocks, yeah, again, and backtest software might tell you that it's the same thing, it's just opposite, but it's not like that in reality. You got to look at the stocks, borrow the stocks. You will have issues with stocks will not be available at the time when you absolutely need it. They might be called back. You might not be able to find them in the size that you need if you're running a fund. It's not realistic to assume you can just short freely in the equities world.
Right, and it was interesting. What I found most interesting about your futures book comes back to what you were just talking about. You said that you shouldn't even really be doing futures trading until you had, if I recall correctly, $5 billion in capital. Was that? Do you still was it that large? If I recall correctly,
I think I said 1 million. I think I said 1 million, but
1 million. Okay.
I mean, it depends a little bit on what you want to do in the future space. But I mean, to launch like a properly diversified trend following model where you trade like 50 to 100 different futures markets. I mean, if you want to do that with, I don't know, $100,000, you need to take an enormous leverage on that. And once you take an enormous leverage, I mean, you pile up the risk. You also you will blow up sooner or later. You take too much risk, and you will blow up. I wouldn't recommend people doing that without sufficient capital behind them. I mean, it's very tempting in the futures world to think that because we have this leverage possibility, anybody can join with a tiny bit of money. Hey, put $10,000 up for margin and take a position for 10 times or 20 times more that if you want in some markets and more in some markets. It's not a good idea, people. Not a good idea. You want to go gambling, you go gambling, but that's not the industry we're in. I mean, it's tempting to look at this as gambling, but again, we're running a business here. But this is you don't put everything on red and spin the roulette wheel.
That's a great way of putting it. Your third book, which I also love, Trading Evolved, I guess because you had so many of the finance geeks going, man, I love your first two books. Can you show me how you actually did that? By the way, folks, I also subscribe to Andreas' research website where he does all of this for you. So don't think for a second you need to learn Python in order to invest well. But you did write Trading Evolved for, let's say it, the nerds. And it's a really good book on how to just build your own stock screeners. Did you do that just out of the request, or because you wanted to kind of fix it in your head to make sure you got it all right?
Yeah, it's more the latter. So I was like a year or two before that book came out. I was in the process of migrating my own stuff from primarily C#. I was coding in before, and started to finally get into Python. See, programmers who listen to this will understand me, I hope. So when I first started looking, coming from C type of programming environments, when I started looking at Python first, I thought I dismissed it completely. I mean, is this for children or what? I mean, where are my curly braces?
All my coder friends say the same thing.
Yeah, where are my curly braces? Where are my semicolons? Come on, this is like writing in clear text. What are we doing? Like basic next, like 20 go to 10? I mean, come on. I mean, that's how it looked for us arrogant old school programmers. I've been programming since 1984, pretty much. Yes, I was 9 years old at the time, but yeah, I had a rough childhood. Anyway, so for me, it looked stupid. I mean, the whole concept of making code blocks by having a tab, but I slowly started to understand the beauty of Python and just how easy it is to build stuff. I mean, you need to put in some real work and some real skill to get good at, I don't know, C++, even C#. Python, yeah, sure, Python can get complicated, but you can get stuff done much, much simpler, much faster. Stuff that would take me a week to do, I can suddenly do in an hour. It's just that quick, that fast. You have these ready-made tools for the purpose of analyzing time series. It's beautiful once you get into it. So I was increasingly getting into this. At the time, I was doing a lot of cooperation and work together with a company called Quantopian. Much because of that, because I was traveling around the world speaking at conferences as well, in Singapore as well, actually. In Singapore and New York, we had some great conferences over there. It's such a shame that company went under. Their conferences were, in my view, some of the best around. Some of the most fun to speak at as well. So I was getting into this myself, and I figured why not kind of document it and put my thoughts down on paper. And quite often, I mean, you learn something better when you're forced to explain it to somebody else.
Of course.
The biggest surprise for me on that book is I didn't expect people to really care about this book. I mean, come on. I was surprised enough when people bought my trend following book. The stocks book, fine. Stocks is a little bit broader topic, but I broke programming. Much to my surprise, that book sold the best of my books, of all of them.
Wow.
I was completely taken by surprise. I did have some help, though. I did break a rule of one of the Quantopian's rules, but I got away with it because I was one of their speakers. You're not supposed to market anything in their forums. They had a great forum back in the day, a web forum. Okay. But I started a discussion thread. I just mentioned I had this book coming up, and that became by far the most read thread on that forum. And because of that, I told people about it like 2 months before the book came out. And suddenly we have, I don't know how many thousands of people who were just standing by to buy it on the first day. Once you sell like 3,000-4,000 books on the first day of release on a book like this, it comes up on the top list of everything worldwide, and that perpetuates it. Sure. So that book did well.
Oh, wow. Congratulations on that. I'm not surprised. I mean, even for a adult like me, I actually understood it. I had some stuff popping up. I'm like, oh my God, this stuff works. Wow. So I was very, very pleased over that. You have since moved over to family offices, you're a consultant, and you've also built a new app that looks like, to me, and again, I'll let you explain it, but to me, it looks like an all-weather investment app where it takes the principles that you've written about and allows you to save, I believe, weekly. Money goes into a weekly, and you just put it into a really awesome all-weather stock portfolio. Can you just explain to us about Hush and what, sure, what you meant to do with that?
Sure. I mean, I wouldn't claim that I had built it. I mean, I do know how to program, but I'm not a proper programmer. I can get stuff done, but not on the level of doing this stuff. So I was approached a couple of years ago by somebody who had read my books. He had some ideas of starting something together, and I was, to be honest, a little skeptical to begin with. You get a lot of strange business propositions once you write some books. But I quickly realized that he knows what he's doing. He's done this before a few times. He started and sold a couple of companies in the past and done very well. Right. So we sat down and analyzed what's missing out there. What is needed in the American markets? American markets is the biggest. So why not start there? This is a highly regulated business, of course, so you need to do one jurisdiction at a time. So why not start with the biggest one? So what we realized, and that's very much fits with what I've seen from my books and people I got to know because of that, retail investors are generally bombarded with noise. All the terminology, the get-rich-quick nonsense, the spreads and the peeps and the schmips and the crypto and the whatever it is, they get bombarded with all of these stress factors. And that's fine if you're a hobby guy, you do this for fun, but most people out there are not. They just want to get it done. And let's face it, people don't really trust the banks anymore, and I can't blame them. No. So we wanted to offer something that just works with a minimum amount of noise, a minimum amount of finance terminology. Just take care of it. That's what we call the whole app. We call the app Hush. It's a nice, quiet, safe environment. We made it super simple to onboard and use. And the idea is to help regular Americans, talking absolutely everybody. There's no minimum amount. You can put $5 into the app, and we'll manage the whole thing with very much like an all-weather type of portfolio, but with well, with my personal spin on it, taking momentum into account, taking volatility into account, global diversification model, and so on. So I'll say a modern spin on the classic all-weather type of approach. And yes, I mean, we're trying to, you mentioned the weekly as well. So what we're trying to do is to encourage positive behavior, positive financial behavior. Like we have built into the app that you put something in every week, you top up your account. Can be 50 cents, can be $1, can be $100, whatever makes sense for every individual. But we just want to help build this habit of set aside a little bit all the time.
Yeah.
Now, the contrast from one popular thing in the recent years have been all kinds of concepts like rounding up your investments, for instance, which can result in very unexpected and random amounts you put in a month, and now you have no idea how much is really coming in because your normal purchases are rounded up and the extra cents are moved over. We want to have something more deliberate or purposeful. I mean, to build a habit, you need to make a deliberate decision and not just have it like randomly. That's basically what we are doing. We just launched it like a few weeks ago and looking good so far.
Looking great already? Oh, fantastic. Good for you. Congratulations on that. Oh, I guess one of my other questions is, you just mentioned you were coding since 1984. I guess overall, and again, I go back here, I think you said you were a comp sci major in college. How did you get involved in running money and, family offices and all that?
I was not. I was a finance major and I went to a finance university.
Oh, did you? I'm sorry.
Yeah. Okay. No, I've been coding since I was 9 years old, but I never studied programming, not formally.
All right. Okay. Great.
No, so I mean, briefly, what I did was when I was in finance university, the incredibly prestigious and well-known school, Gothenburg School of Economics. I'm sure you all heard of that. It is the second best school in Sweden, so I guess it's anyway. No, nobody outside of Nordics would have heard about it, but it's a decent school. So I started my first IT company when I was about 19, I guess. Mm-hmm. Yeah, pretty much. In 94, around there. Right. Back in the 90s, it was a weird time. If you were a computer geek in the 90s, it was nearly impossible not to start a company. I mean, I'm not even joking when I say people came up to me in school saying, "Do you have a company? My mother's company need to hire somebody, but they need a consultant. Do you have a company?" These things kept happening because rumors start spreading about who understands computers. I guess I started a company, and that's how most of us got started. I mean, many of us didn't think of the idea of starting a company until people started asking. I did it a few years. I joined a large financial institution back in 99, I believe. I exited my company and figured that was time to do something grown up. Pure dumb luck to exit in 99. I had no idea that anything would. I mean, I'd love to take credit for the timing, but come on, it's dumb luck. I spent 5 years in corporate management for that large company until I realized that corporate management is not really something that agrees with me very well. I mean, the better I did, the more time I got to spend in teleconferences discussing nonsense with product managers, project managers, and program managers, and my dotted line and my 3 different bosses in 3 different countries, and the committees and the
stakeholders. Yes.
Oh yeah, sure. I mean, if you stay too long time in a large company, at least a company like that, after a while you can't express a normal sentence without using 3-letter acronyms for everything. You can't express anything to outside people because you talk and think in corporate lingo.
Yeah.
No, not for me.
No, fair enough. And you now, so you moved from Sweden down to Switzerland, right?
Yeah, exactly. I went on a 3-month business trip from Stockholm to Geneva, and I never came back. That's. I'm
sure your boss was happy about that.
Well, I mean, I did transfer in the same company, but still, what I realized was, so I become something I like to call an accidental Swiss.
Right.
Yeah. Switzerland is not a company very few people grow up thinking that my dream in life is to move to Switzerland. But once you kind of accidentally come over here and you realize that it's a pretty nice place, why do I want to leave it? Yeah. I mean, at the time when I was based in Stockholm, my only goal was I was going to move to New York. Of course, I was going to live in Manhattan. Then I ended up in Geneva and realized why do I want to live in Manhattan again? Quite frankly, the lifestyle difference, standard of living. I mean, New York is great if you make 10 million a year, but it's an interesting
I was
place
just
to.
there. I can't believe how much a hot dog costs in Times Square now. It cracks me up.
Oh,
Uh,
hot dogs are my favorite over there. Hot dogs, in my view, is, and you're American, you'll get this. In my view, the hot dogs in Manhattan are a microcosm of the New York way of thinking. So what I realized being quite a few times in New York is that the hot dog vendors, most of them, they don't have prices stated. They take a look at you and they decide quickly how stupid you look, and they give you a price. So I started making a game out of this. I mean, come on, a couple of bucks back and forth doesn't matter much to anybody, but I started making a game out of it. How much can I negotiate hot dogs in New York City?
wow.
Much more than you would think.
No
It became quite a funny game. I was playing this for a few years. I mean, they give you a price, and oh, come on. I bought 3 of them for this guy over there. Charge me half of it. What are you doing to me? You just get into it after a while,
Fantastic. I'm going to try
Yeah.
that next time I'm there. I've never done that before.
It is a fun game, just for the hell of it, just to negotiate the hot dogs in Manhattan, just to see what happens. I had fun doing it.
Oh, that's fantastic. Oh, goodness. Yeah, I don't blame you for. It's funny. I grew up in New Jersey, and once I landed in England, I was never going back. So I don't blame you for staying at Geneva. Geneva's beautiful. We must talk about this. Your fiction book, okay,
Yep.
Most Private Bags. I guess you wrote 3 very successful nonfiction books. What made you do a fiction book? You never mentioned writing other than for coding.
Nope.
So what happened there? I'd love to know.
I mean, first, I wanted to do it. That's one good option. I mean, I write my books for fun.
Yeah,
I wouldn't write a book just because I think there's some sort of market need for it.
Mm-hmm.
I write my books for fun. I mean, nobody, unless there's certain topics you can write about and potentially make a lot of money from. If you have a movie deal or something, but come on, most authors, even the famous ones, they don't make much money from books. So it's not really a business. I'd say, normally I don't tell this story on camera, but you'll get it from me. A few years ago, I made the mistake of answering the question about why I write books. It was in stage in New York. I made the mistake of pulling one of my usual jokes. So I'll repeat it here and see if you get to cut it if you want to. Somebody in the audience on the Q&A session asked me about why I write books and if I make a lot of money from it. And I just wanted to give a stupid reply. So I said that to the best of my knowledge, the only way to make serious money writing books is to write about wizards, vampires, or BDSM. And said, I have very little experience of either topic. And the room goes dead quiet. And I mean, this was in the middle of, so in my view, there was Harry Potter, Twilight, and this 50 Shades nonsense were the books that were selling the most at the time. It's like 10 years ago. So I figured it's obvious which 3 books I'm talking about, but the room goes dead quiet. And now the weird Scandinavian up there said something you're not supposed to say on the stage. I still maintain it was a funny joke, but apparently the room didn't agree with me.
Well, they must have just seen the girl with the dragon tattoo. They got very scared.
Yeah. Anyway, so why did I write this? Well, okay. First, I wanted to write a novel for a long time. I just didn't have a proper topic. Then second, I had I would dare to say, a pretty absurd career in many ways, in a very absurd business, in an absurd country. So I have a lot of stories, and a lot of those stories, for many reasons, I cannot tell them outright.
Sure.
But I can fictionalize them, and I can keep a lot of the real things and combine characters, combine events, change enough details, and so on. So I wanted to tell some stories, and I wanted to see if I can do it. And then because I'm a pretentious guy, I also needed to pick a proper genre. So I decided to write in the style of the old hard-boiled masters from like 1920 to 1940s. Mostly the Californian-based, the San Francisco area-based back then. I mean,
National Heaven and all that.
Absolutely, and Raymond Chandler, obviously, these guys, absolutely, yes. So I wanted to try to write in some sort of, obviously, I can never reach their level of skill, but I wanted to still aim for that type of style that they built and popularized back then. So yeah, I had a lot of fun writing it. That's for sure.
I bet I'm going to have a lot of fun reading it. Andreas, let me just throw it back to you for any final words. Folks, I'm going to put all of Andreas's links in the description below, so you can get his 3 awesome trading books. His one nonfiction book, and of course the Hush app. But Andreas, any final words before we wrap it up?
Not that I can think of, but no, it's been a great chat. And yeah, anytime. Let me know anytime. I'll happy to come on and have a chat.
Brilliant stuff. Well, thank you very much. And folks, thank you very much for joining us today. Andreas Clenow, best-selling author, runs family offices, writes nonfiction. He's our new Renaissance man right now. So
that's me.
Hope you enjoyed it, and we'll see you soon.
Thank you, Sean.